Hey everyone, and Happy New Year 2025. One of the stories that we think could have quite a bit of tailwinds developing in 2025 is, contrary to popular belief, going to be the China story. Now, when we look at the China story, we need to understand that we've had sort of one burst of momentum that came on the back of the initial stimulus in September of last year. So this here is what that looks like. This is the FXI ETF, and you can see we had that initial burst in China. We mentioned that here in this video series here, but it's been very short-lived. There hasn't been much, so we've actually seen yields in China drop to extreme lows over the past number of weeks, couple of months, and we really need some other catalyst here. So I wanted to just quickly go through and show you the levels that we're watching very closely for a potential next leg higher in terms of the trading time frames. We obviously have to track the China with the underlying indices like the Shenzhen, and we can even look at the Hang Seng Index in Hong Kong. If I look at momentum in the FXI ETF, which is ultimately the choice of trading vehicle for me, because it's a US listed ETF, what I am noticing though very clearly is that we did get a very clear buy signal from a momentum perspective down there. If you look at this on this chart here, that's there. I'm pointing towards that little green arrow. And then that's our momentum indicator. The TST Trender actually did see this ETF rally as much as, 40% before settling into this range. And so the momentum is totally absent right now. We're in what we like to call a chop zone. So basically somewhere between, on the FXI ETF, between about the low 29s and maybe the mid 33s, we are just chopping back and forth. So if I'm looking to get long this from a momentum perspective, I probably need to see this thing break back above 33.50, and then ultimately this trend could resume. But I just wanted to share with you a little bit what the momentum looks like here as we kind of peg it out to the or put it into perspective with this longer term breakout, which still to us remains valid. Again, I think the China story, and the U.S., they have to kind of work together. So we'll see what the politics look like here over the next, 3, 6, 12 plus-ish months. But I do think that if we see some sort of semblance of cooperation, we could very, very quickly see the FXI ETF get right back up to the highs we saw in early October of last year. Individual stocks like Alibaba are actually notably undervalued here. This is a chart that I showed to clients the other day, where you can see the share price of Alibaba, for example, has basically done nothing for the past 10 years, yet the top line revenue growth is like 1,500%. So there's an obvious disconnect from what I'm hearing. The Asian investors understand this. It's the Western investors that aren't maybe willing or able to get their head around this because of the geopolitics, and that of course is understandable, but we think there is a potential tailwind here that could surprise to the upside in, again, the China story. FXI would be an ETF, Alibaba a single name stock to focus on that.